Two encouraging economic reports landed this week, one from Washington, one from London, and together they gave investors something they have not had much of lately: good news on both sides of the Atlantic. Start with the United States. The latest Consumer Price Index came in softer than recent months. The CPI is the government's main measure of what Americans pay for everyday goods and services: groceries, rent, gas, medical care. When that number rises more slowly, it matters for one very important reason. The Federal Reserve watches it closely when deciding what to do with interest rates. Here is the logic. When inflation cools, the Fed has more room to hold rates where they are, or eventually bring them down. Lower rates ease borrowing costs for households carrying mortgages and for businesses taking on debt. That is good for the broader economy, and markets tend to respond well to it. But 1 month does not make a trend. Fed officials have been clear. They want to see sustained progress on inflation, not a single encouraging print, before they feel confident enough to ease monetary policy. What this week's data does do is remove some pressure. It also has the potential to calm bond markets, where yields, the effective interest rate on government debt, tend to spike when investors worry that inflation is picking back up. Now cross the Atlantic. The United Kingdom reported solid economic growth this week, adding to signs that the British economy is finding firmer ground after a rough stretch. The UK has been fighting its own inflation battle, and the Bank of England pushed borrowing costs to multi-decade highs to do it. The concern was that those higher rates would choke off growth entirely. This week's data suggests the economy is holding up better than many had feared. For global investors, the combination carries real weight. Softer US inflation reduces the risk that the Federal Reserve needs to raise rates further. UK expansion signals that a major economy can grow even under tight monetary conditions. Both outcomes support what markets call risk appetite, the willingness of investors to hold stocks and other assets that carry uncertainty. When the backdrop looks less threatening, investors tend to lean in. Markets have been highly sensitive to any data that shifts expectations for central bank policy. This week's readings nudge the conversation, at the margin, toward rate cuts becoming a more realistic possibility. Neither the Fed nor the Bank of England is ready to move yet, but the direction is clearer than it was a week ago. Watch the next round of inflation and jobs data from both countries. That is where the real signal will come. Whether this week's good news was the start of something, or just a pause. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.